Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's June 7th. Hope you guys are having a great day so far. We do got a few items, or actually one item here on the economic calendar, so let's jump into it. Today is job openings for the month of May. So in April, we had 5 million job openings, and that increased to 5.4 million. So that was a good data that had investors kind of excited here. And let's check into that in the headline news. Stocks are up a bit, but the Dow and S&P actually dropped back, so it went into negative territory. Excuse me. Nasdaq is still in positive territory, so we're kind of in a uh, in reports here. Some of this has come back, where the full focus here, if you obviously aren't aware, is the state of the economy and how quickly it can rebound from the coronavirus. But with the uh, with the rising cases that are coming up, and now they're getting optimistic that we're going to have this V-shaped recovery, and with people going back to work and everything, now we're getting more cases and some more closures, so we could be stalling that a little bit. There was a comment by a Fed member Bostic out of Atlanta, basically saying that he thinks we're kind of leveling off, which means that it may not be that V shape that they're hoping for, and it may take some time. There are comments that saying we may not get back to the full jobs back until around 2022. So this is kind of slowing much slower than what they want, and of course this is kind of souring a little bit of their moods in the stock markets. The European Commission had lowered their economic forecasts, and so all this kind of leads to kind of a souring mood for a lot of investors. So they're kind of pulling back on their investments in the stock market. But let's go ahead and take a look, see what's going on with the bond market and how that might be affecting mortgage rates. We're doing quite well. As you can see here, we're up 20 basis points now, which will lead us to some better pricing than what we saw yesterday and for mortgage rates. So that's obviously the good news, and we keep rising and getting a little bit better pricing. As you can see, we're getting further and further away from the 25 and 50-day moving average. At some point, we'll probably snap down to get closer to these, but in the meantime, we're enjoying some better pricing for mortgage rates. Let's see what yields are doing today. Here are the 10-year yields. We went from here all the way down to here, and now we're kind of sitting at just under 0.6, or right about 0.67. So yesterday we were right around 0.7. I think when I did this report yesterday, and right now we are sitting at about 0.67. So a little less pressure on mortgage-backed securities, which is kind of helping out the improvement in our mortgage or interest rates here. All right, so that's the good news. If you guys are looking to buy or refinance, let's talk. My contact information will be listed in the description. I am a loan officer. However, these presentation I like to bring out to you guys is my personal has no representative of any other company or anyone else, just my personal feelings here. And we'd love to be able to talk to you a little bit about how we can, if you need some help or assistance or guidance in mortgage, refinance, or buying. Let's talk, and we can perhaps help you guys out. You guys have a great rest of your day. Thanks so much for watching, and we'll catch you in tomorrow's video. Bye-bye.